He became perhaps the most influential person in the crypto space in 2020 when he made a very bold bet on Bitcoin. Since the summer, Michael Saylor, CEO of MicroStrategy, has invested over 1 billion of the company's funds in Bitcoin, making it the first publicly listed company to hold Bitcoin as part of its treasury policy. We have a lot of ground to cover since our last interview that we did in the summer. Please welcome back to the show, Michael Saylor. Michael, happy to see you again. Welcome back.
Thanks for having me, Daniela.
Yeah, well, I want to congratulate you because, I had spoken to you, I believe, the week that you decided to move your company in the direction of Bitcoin. It's obviously been an incredible decision thus far, and you've become really a celebrity in the crypto space. I mean, I had Max Kaiser on recently, and he came out with a Michael Saylor t-shirt. How have you been dealing with the newfound celebrity status here?
I'm happy to be a member of the team. Actually, there are a lot of people that were carrying this banner of Bitcoin for many, many years before me. It was a lot harder to be a Bitcoin advocate in 2017, 2019, 2013. You had to have a lot more vision. You had to have a lot more conviction. Max has been around since the very beginning. I felt like in 2020, after March, it became a fairly easy decision. The entire world had a problem of monetary expansion. If you're an engineer, you look for a technology solution to a problem. There are a lot of non-technology solutions to monetary expansion. I mean, gold is a 5,000-year-old non-technology solution. And now Bitcoin is the technology solution. I had 10 years of experience. I could look back on what all the Bitcoiners have done for a decade. And I just had to make a guess, which is the rest of the world going to be rational and look for a technology solution to their problem? And I don't think it's an irrational thing to bet on technology in the modern era. So that's what Bitcoin is. Great
Well,
monetary technology.
very, very humble response, Michael. Well, since we spoke, Bitcoin obviously making new all-time highs, attracting a whole new slew of investors, but also attracting the attention of governments and regulatory bodies. So, before we get into other matters here, I just want to talk to you about some current events here. What do you make of like the FCA, the ECB's Lagarde, and now recently Janet Yellen coming out warning people about potential dangers of Bitcoin, of how it's used to fund, for example, terrorist activities? What do you make of all this?
I think what's driving the Bitcoin market is institutions. And institutions are bringing billions and billions of dollars to Bitcoin because they want to store a value against monetary inflation. Everybody's buying this Bitcoin on regulated exchanges. They're storing it with regulated custodians, and they're doing it subject to AML, KYC regulations that have been in place for a long, long time. There's not anybody that's buying Bitcoin right now that isn't expecting to do it on a regulated exchange subject to normal regulations. And the fact that AML, KYC regulations apply to bonds, Apple stock, Tesla stock, and other types of assets hasn't kept them from having value. So I think the summary here is we're going to find conventional AML, KYC regulations applied in Europe and the United States. And everyone that's buying Bitcoin and holding Bitcoin as a monetary inflation hedge is going to find that to be acceptable. And this is much ado about nothing.
Okay, interesting. Let me take that one step further, though, because so you don't see it as a threat to Bitcoin down the line, Michael, if governments are going to start being more vocal?
If I wanted to take $1 billion of Tesla stock and wire it to a private wallet in sub-Saharan Africa, my bank wouldn't let me. That doesn't keep me from buying Tesla stock, right? If I wanted to take $100 million worth of farmland in the middle of the United States and wire it to a private wallet somewhere in Asia, that doesn't, the government wouldn't let me. I can't physically do it. It doesn't keep me from buying farmland as an inflation hedge. People are going to buy Bitcoin because it is great property in cyberspace as a monetary inflation hedge. If you actually put regulations on it that are anti-money laundering regulations, or you put regulations that have to do with know your customer to prevent using it to finance any illicit activity, it's not going to undermine its value as property because it's the most pristine, highest quality property in the 21st century. People are going to buy it. There are going to be regulations that'll vary from country to country, and I think it'll be just fine.
Okay, but don't the regulations go against the essence of what Bitcoin was created to be?
There are going to be some people that aren't going to like those regulations, and I understand that, but it's not going to impair the usefulness of Bitcoin as a monetary inflation hedge.
Fair enough. I want to dive deep now in a topic you bring up often when you speak of Bitcoin, and that is Bitcoin as a store of wealth. And I wanted to take a quote that you said from an interview, another interview. You said, say you actually wanted to take $1 million and put it into an investment and give it to your daughter or granddaughter in 30 years. How would you do that? How do you pass down a material amount of money to your granddaughter or your daughter in 30 years? Because I can't do it with real estate in Florida. They tax it away from you in 30 years. I can't do it with any stock because I don't know the stock won't get destroyed in 30 years. I can't do it with gold because it's going to be cut in half and maybe seized by someone in 30 years. And I can't do it with a bond, and I can't do it with currency. With Bitcoin, because you can't make any more of it, you've got this pure piece of financial energy. You could buy it, you could hold it for no carry costs, and you would be able to hand it down to someone in 30 years. So I find this especially interesting because I'm at a point now where I have newborn children. I'm thinking about their future. I'm investing for them. As many people know, I come from the gold world. And I guess I speak for a lot of gold people of having a hard time accepting Bitcoin as a form of wealth preservation. So I'm asking you, Michael, help us cross that divide, right? Because, and again, I'm speaking from the gold world, most of us will see it as a speculative play, but it's very frightening to know where it will be in 30, 40 years down the line.
Well, I think that gold served as a store of value because it was hard to produce, and every wealthy person on the planet agreed that gold was the principal fundamental money, right? The gold standard, if you will. 5,000 years of the gold standard, it makes sense. All these things make sense until humanity invents something or engineers something better. Horses, wooden ships, swords, bows and arrows, brick walls, roads, they all made sense until we had airplanes and electricity and modern technology and telephones and the like. So, you know, Bitcoin is, you could think of it as a social network combined with money. If everybody on the planet agreed to put their money on a digital network, the Bitcoin network, then and sell their gold, you would have something which had all the benefits of gold, none of the liabilities of gold. That's what's happening right now, right? That's why Bitcoin is up 300% in the last 12 months, and gold is up 15%, right? If you wanted a year when gold should have performed, a year of political instability combined with monetary expansion, this is the best year I can remember in my lifetime. When, well, you know, maybe back in the 70s you had something, but in the last 20 or 30 years, this is a year when gold should have performed, but it didn't. And the reason why it didn't is because Bitcoin is digital gold. And when somebody comes along with something better than the 5,000-year-old non-technology or old technology, it replaces it. Now, why is Bitcoin better property? Well, because it's pure monetary property in cyberspace. It has no weight, therefore I can move it at the speed of light. It has no jurisdiction. Gold has to go into a vault in Manhattan or in London, and some bank, some counterparty, and some government has some control. I can't move $1 billion of gold with my head in a few seconds from one side of the planet to the other side of the planet. And so as long as you have mass and locale, the property is going to potentially be impaired. If you had $100 million and you bought land in California, the governor of California has some power over the value of the land. The government can impair the asset. If you take $100 million and you put it in gold and put it in a vault in a bank, they can impair the asset. The government, the governor, the mayor can impair the asset. The laws of physics impair the asset. I can't wiggle my nose and move the gold a million times in a split second. The laws of physics control me. With Bitcoin, the government can't impair the asset so easily. The laws of physics don't impair the asset, and software engineering enhances the asset. So if I'm looking for a way to pass monetary energy, money, 30 years in the future, I have to figure out how it's not going to be impaired. And of course, that just means I want the least number of moving parts.
Absolutely. And those are all extremely valid points in regards to Bitcoin. And in regards to the returns, absolutely. Bitcoin's returns, no comparison to gold's. But we also don't see, a 30% correction in a day on the gold front. So again, as a store of wealth for someone who wants to sleep well at night, how do you get over that? Those massive corrections that we just don't see in the gold market.
I, you know, first of all, I think that the massive corrections are becoming less massive year by year, quarter by quarter, month by month. The market in Bitcoin is stabilizing as more institutions come into it. And I think we can see it over the past 12 months. Second, I think that everything that's living on this earth is volatile, and things that are dead are not volatile. And so I would much rather have a volatile 300% return than a non-volatile 15% return, or a lesser return. And there's least volatility in cash with a 0% return. So stability is stagnation, volatility is vitality. Living things are volatile. I like living things. I want to live. Life force implies volatility. It's like a Jedi mind trick to convince you should be afraid of volatility. If volatility is going to return 200% pre-tax every year for 12 years or for 10 years, and you're afraid of it, you lost 99.5% of your wealth because you're afraid of volatility. That's like, you can't raise your children in a bubble and tell them they should not. I mean, if they stay in their basement and they never leave the house and you surround them with the bubble, how are they going to grow and live and prosper?
No, I like that. You're getting me there. I like that. I see what you're saying. I hear what you're saying. You brought up gold confiscation. The last time it happened was 1933. Yes, is it something that the US government can still do? Yes, they can. What is the likelihood of that happening again?
Of gold confiscation?
Yes. Do you really see that as a reality, that something that could happen again?
I don't think that there's going to be gold confiscation going forward. And I think that what we're going to see happen is that people saw in 2020 that gold wasn't working as a monetary inflation hedge, and Bitcoin is, and they didn't understand the technology. You're going to see people selling their gold and buying Bitcoin. You've got a arbitrage difference, 300% on Bitcoin, 15% on gold. How long are people going to allow the differential interest rate? One currency yields 15% interest, the other currency yields 300% interest. And the only thing anybody has negative to say about it is it's new and it's going up, 10 times faster in a volatile fashion. At some point, people are going to be shorting gold, buying Bitcoin, and it's going to accelerate.
I want to get to some viewer questions now. Michael, I always like to be very interactive with the audience. I asked them to send in questions. I received a ton. So I've just chosen a few here for you. So I want to get through as many as possible. This one comes from actually a guest of our show, Vince Lancy, VBL. He says, is there a place for both Ethereum and Bitcoin? If so, what is the material difference, real or potential, between them? I'd like to add, I also want to get your thoughts on the run-up we've seen in Ethereum here.
I mean, Bitcoin is the emerging dominant digital monetary network. if you're looking for a treasury reserve asset and you're looking for a generational store of value in lieu of gold or in lieu of any other scarce tangible property, then Bitcoin is compelling, and it's compelling because it's simple. Ethereum is a speculative asset, and it's a very ambitious technology project. It comes with a lot more complications, a lot more risk. If you have a technology portfolio and you wish to invest in a technology that has risk and complexity because you're interested in decentralized finance and all of the applications in the Ethereum blockchain, then that's an interesting thing to consider. But if you're looking for a treasury reserve asset or a long-term durable store of value, I think Bitcoin is obviously the right choice. In my opinion, the entire world has a multi-$100 trillion store of value problem, which will be solved by the dominant digital monetary network. Since Bitcoin is only 650 billion in market cap, and since there's a $200 trillion addressable market, the most obvious thing in the world is buy into the dominant digital monetary network and wait for the rest of the world to start to realize this is the solution to their problem. There's no better risk-adjusted investment idea I can see in this world right now than to buy something everybody needs that's got 95% network dominance, that is engineered specifically for that purpose, that dozens of billion-dollar entities are embracing for that purpose right now.
This one comes to us from Tooth Mechanic. He says, what percentage Bitcoin does Michael recommend for your average retail investor? Does gold still have any place in a retailer's portfolio?
You know, I just can't see why anybody would buy gold. I think gold's going to be demonetized. As the generation that bought gold learns about Bitcoin, and as generational wealth moves to the technologist, I think the Bitcoin is the digital gold. Look, I've got a phrase, diversification is selling the winners to buy the losers. So what portion of your tech portfolio would you invest in Amazon versus the retailers that that aren't Amazon, right? It seems like you would have lost on 15,000 retailers, made money on Amazon, and maybe broke even or made a little bit on Walmart. And what portion of your portfolio would you invest in non-Apple stock in the mobile space? And what would you invest in the other search engines instead of Google? And what would you invest in the other social networks instead of Facebook? The diversification away from the winner is diversification to the loser. So take half your portfolio, invest it in gold and get 15%, and the other half invest in Bitcoin and get 300%, and then do that 10 years running, and you'll pretty much destroy half your money. Like, you'll lose half your wealth.
Bitcoinator asks, does MicroStrategy have a plan B in case Bitcoin drops a lot? Something that I really doubt. Or are they hodling no matter what?
I'm a rational actor, and so I consider what's going on in the world at all times. My view of Bitcoin is it is the highest quality property or the highest quality asset you can own in the world right now. It's superior to bonds, superior to commercial real estate, superior to equity, superior to gold, to silver, to commodities and derivatives. And that's an easy observation in a world of extreme monetary inflation, with inflation rates of 15% or more expected for the next 5 years. It's easy. If the monetary inflation rate was zero, it would be difficult, and I would have to evaluate the differential coupons, rents, and dividend yields of all those other assets because they're fiat derivatives. And if no one could mine any more gold ever again, and if it wasn't centralized, I would have to consider that. If something changes, and if some other superior technology comes along, we'll figure it out. But right now, I don't see anything superior. So my view is that every time you sell Bitcoin, you're buying an inferior asset. And so you're selling a winner to buy a loser. And given the likely differential rate of price appreciation over the next decade, it would be seriously wealth destroying to diversify out of it.
what is your answer, Michael, to the Rosenbergs and the Rubinis who come out and say this is just a massive bubble?
Well, my answer is none of them have ever considered Bitcoin as engineered money on an engineered monetary network. Electricity wasn't a bubble. Automobiles weren't a bubble. Aqueducts weren't a bubble. Airplanes and airlines aren't a bubble. We spent massive amounts of money on communication system, in order to deploy the telephone, the telegraph, the mobile phone, television. None of these are a bubble, right? And in this particular case, Bitcoin is a monetary network. They simply don't understand that it's a monetary network. Once they understand, and maybe they'll never understand it. There are plenty of people that thought, that made fun of Henry Ford. What is this with standardized automobiles? John D. Rockefeller had Standard Oil. He standardized oil. Was that a bubble? General Electric, general electricity to your home to power up your appliances. Is that a bubble? Right? General Motors, that's everybody is a standard motor. We're replacing the horse and buggy. Is it a bubble? And the answer is no, it's not a bubble. It's an engineering breakthrough. And eventually everybody and every company on earth is going to be wired into a monetary network because it's thermodynamically sound and it solves a problem that everybody has. Once they realize it solves the problem, and maybe they won't ever. There are people that don't have electricity in their houses. They thought, there are demons that were going to invade their kitchen with the thing. And I suppose you find people that get shocked by electricity and they're still afraid of it and they never gave up their horses. But no, it's not a bubble, it's technology.
So how far away do you think we are, Michael, from less negativity pointed towards Bitcoin and an acceptance that it becomes just part of our society?
How long did people object to noisy automobiles, and how long were they afraid of electricity, and how long were they afraid of elevators and tall buildings? I mean, there are people that didn't want to get in elevators for a while. I suppose probably it's a decade. Like it takes a decade for people to adjust to these things. And, you can't really go much faster than we're going. Bitcoin is appreciating at 200% a year for 12 years. It's appreciating at 300% this year. I kind of find it hard to, how many big tech networks grew at 100% per year for a decade running? Like, this is a big tech monetary network that is expanding in excess of 200% a year. So you can't really ask it to expand any faster. I think that for the next decade, we're just going to see the expansion of a digital monetary network that is Bitcoin, and people are going to probably resist it and fear it more as it grows, because when no one notices it and cares about it, they don't have an opinion. But when people come into your neighborhood and they start wiring their house for electricity, you start complaining about all the ditches they're digging and all the obstructions in the road and all the power lines. And then you're worried about the power lines giving you cancer. And then you hear about someone getting electrocuted, and then someone drives a noisy automobile down the street and the kids are playing in the street and you worry about it. There's going to be a lot of pushback, I suppose, and it'll be natural. But it's not going to change the inevitable, which is the world needs a digital monetary network. It's a $400 trillion problem. It's an idea whose time has come. You're not going to be able to stop it.
This one, I like this one. This is from Shaft. He says, without naming names, has Michael convinced anyone with as much cash or more to move their treasury into Bitcoin? So we all saw that famous exchange between you and Elon Musk. Have you been able to convince any other CEOs or get them halfway there?
I've been talking to a lot of people for the past, I guess, 6 months or so. And I think that ever since we announced publicly that we were embracing Bitcoin back in August, and when we came out of our quiet period in September, I've had a lot of conversations with CEOs, a lot of conversations with institutional investors. As I've said before, Daniela, everybody has this problem. The more money you have, the bigger problem you have, and everybody needs a solution. The best solution is the big tech dominant digital network solution. That's how people solve their problems with Google, with Apple, with Facebook, with Amazon, with Microsoft. They're going to solve their monetary problem with the dominant monetary network. And I think in 2021, you're going to see a lot of corporations embrace Bitcoin. We're hosting a Bitcoin for Corporations Summit coming up February 3rd and 4th. Lots and lots of companies are coming. They're all trying to figure out, how do I plug in my P&L? How do I plug in my products? How do I plug in my balance sheet? Right? You're either going to do it because it's the solution to your problem, or you're going to do it because it's a big tech network growing north of 200% a year. Why wouldn't you do it?
Just to wrap here, Michael, the number one question I got for you, price forecast. They love hearing it. I think you have the biggest call out there still. But where is Bitcoin headed, Michael?
Yeah, people ask me about that. And the point that I make is Bitcoin is not a stock, but it's not even an asset. I mean, if it was a stock and it went up by a factor of 10, then you're valuing it versus the underlying cash flows, and you're thinking that the P to E ratio is blowing out, is becoming very risky. But it's not a stock. A stock is a reflection of the outlook of the cash flows of another unrelated product in a fiat currency system. Bitcoin is pure monetary energy. As the price goes up, the monetary force related to Bitcoin goes up. The attraction that monetary force has, like a gravitational force to money, goes up. So if you want to understand where Bitcoin is going, you look at the entire worldwide monetary system, and it looks like there's 200 to 300 trillion dollars worth of money that's looking for a store of value. In a monetary expansion environment where I crank the monetary inflation rate up by 15%, that $300 trillion has got to find a store of value that's not a fiat derivative. That means that Bitcoin is going to keep growing, and its monetary force is going to keep growing, and it's probably going to grow 200% a year until it has demonetized gold, silver, sovereign debt, bond indexes, stock indexes, every source of monetary energy, which is just a store of value for someone that doesn't want to lose their purchasing power and they need a scarce asset. That being the case, I don't really see an end to up. I think it's going to keep going up for the next decade, at a rate that's pretty commensurate to what it's been doing for the past decade.
Your passion and energy for Bitcoin comes through the screen. I feel it. You are a living, breathing Bitcoin almost, Michael. If I had to ask you, MicroStrategy, your vision for the company in the next 5 years. You took a bold call on Bitcoin in 2020. What's next for the company?
Well, the company's primary product line is enterprise business intelligence, and we're going to continue to evangelize and spread enterprise business intelligence via technology. We just released a great new hyper intelligence product on the cloud. Anybody can go and deploy hyper intelligence to their websites and applications in less than an hour. And we're really excited about that. We'll continue to innovate on that. Our finance strategy and our balance sheet view is that we should be invested in Bitcoin, and we should be plugged into the digital monetary network, which is Bitcoin. I think that thousands and thousands of other companies, thousands of institutions, hundreds of millions, and eventually billions of people will also plug into that monetary network. We're going to enthusiastically evangelize that. We're going to educate the world on how you can plug into that monetary network, and we're going to plug into that monetary network with our technology and with our financial assets as best we can.
Michael, I thank you for your time today. Congratulate you on your success, and I wish you best of luck, and we'll speak soon, okay?
Thanks for having me.
Thank you. And thank you for watching. We'll have much more for you on Stansberry Research, so be sure to stay tuned. In the meantime, you can follow us on all our social media platforms. Thank you for watching. I'm Daniela Cambone.